Hi guys, welcome to episode 1 of the Millionaire Investor Series, and in today's episode, we are going to share with you how we usually analyze properties when it comes to investments in JNA, and not only that, whether this product that we're going to show you today is actually of a good investment product, okay? So today's episode, we are going to share with you an industrial property, not a residential one, and for industrial properties wise, it's very important for us to go into the technicalities and understand the years, the leasehold, what's the current rental, what's your ROE, because all these small things actually do matter. And that's the reason why I'm looking at my screen right here, so that I can feed you all the information that you require, okay? So recently, our team at JNA Real Estate has recently gotten a unit at Admiralty Industrial Park, and this is actually a District 27 investment unit that's around the Woodlands Industrial Park E1 area, okay? So this is a B2 industrial unit of a 60 years tenure, and one thing you have to note is that for industrial sites, it's very hard to get a 60 years tenure unit because government no longer want to release too much land when it comes to 60 years tenure, alright? So this unit that we're looking at is a 1312 square feet unit that is going at $430,000 with a PSF of around $327, okay? The current owner is enjoying a rental of around $2,300, and it's really quite attractive because a residential unit in the market now, let's say in an OCR region, is actually enjoying about $2,300 if it's around the price range of $1 million, okay? And the maintenance fee and property tax also has to be accounted, and that amounts to about $230 per month, okay? A lot of investors, when they come into the market, they forget to include the maintenance fee and the property tax because they always think that it's just rental minusing the mortgage, but the maintenance fee and the property tax is very important. We always tell our clients it's very important because it also cuts into your cost as well, okay? And the current mortgage, assuming you take a 30 years tenure, 80% loan and an interest rate of about 2.5%, the mortgage is around $1,341 per month. Okay, one thing about industrial property is that you can leverage on the bank a bit more, because now we all know that residential properties, it's enjoying about 75% loan to value ratio, but for industrial properties, you can get from 80 to even 90%, which also means that your down payment, the initial capital outlay is actually much lower. Okay, so now let's go into the analysis of this project and how usually as real estate consultants we look at, to see whether is this a viable investment product as well. Okay, one thing about analysis is that we are never emotional, because when it comes to investment, you have to be extremely objective and number driven. The moment emotions come in, which I'm very certain that as first time investors or even as seasoned investors, they do come in, right? You have to have the discipline, or even get us to make sure that you have the discipline to analyze the numbers correctly. Okay, so the first thing that we look at is the initial outlay. So what's actually the initial outlay? Okay, the initial outlay is very important because with the initial outlay, you know exactly how comfortable you are in putting this sum of money into this property. Because one thing for sure is that the holding power when it comes to investments in real estate is extremely important, because you do not want to prematurely exit the market when the price isn't right. So example, if today we have the COVID-19 pandemic, right, and if you were to exit the market prematurely because of the lack of holding power, then you may lose money in the market, okay? So currently for this particular property, assuming that it's about 80% loan, the down payment is about $86,000, and the buyer's stamp duty that you have to pay is $7,500, okay? This buyer's stamp duty, if this is your first time looking at a real estate investment video, doesn't go into the price of your property, but it actually is taxes to the government, okay? So the initial capital outlay in total is around $93,500. So $93,500, okay? So after looking at the per square foot, which I did mention just now is about $327, we have to compare with what the highest per square foot is in the market. Why is that important? Because you want to know whether do you have a buffer, whether are there people in the market that's buying more expensive than you, so that you know that, oh, actually it's quite safe to enter, because there's actually a safety net to it, right? So the highest PSF recorded actually quite some time ago in 1995 was around $2,400 per square foot. And what we see is that the average per square foot now in the market is around $350 per square feet, which means that today if you are entering the market at a per square foot of $327, it's actually considered undervalued, okay? And now we will go into the more detailed numbers as to what the ROE, the return on equity, is. And from this, you will understand why real estate is actually not too bad, or even the best when it comes to investments, okay? So the current rental yield, as I did mention previously, is about $2,300, which gives it an implied rental yield of around 5.6%. okay, with a rental of $2,300 per month, minusing your maintenance fee, minusing your mortgage, actually amounts to $729 in terms of positive cash flow. Which means, after putting down a down payment, after renting the property out at the current rental yield, after minusing your mortgage, minusing your maintenance fee and property tax, you can sit back at home and receive $729 every single month for life, right? And another thing is that when we look at this, when it comes to positive cash flow, we see that there's actually around a 9.3% ROE in terms of positive cash flow. And this actually shows that this real estate is performing much better than any REITs in the market, okay? And not only that, if you take into the principal that your mortgage is actually paying for, right? Because mortgage has principal and interest, am I right? So let's say if your tenant pays for the principal, this principal, if you sell the property at the same value as what you bought for, it's actually going to go back into your pocket eventually, okay? So if you think about, if you look at what the passive income really is, okay, in total, we are looking at a 39.8% ROE per annum, assuming that you sell this property at the same price without any capital appreciation. And if after 5 years or 10 years in the market, there are future developments around, or maybe there's even extension of lease, then you will sell at a higher price and the ROE per annum is much, much higher. Okay, so now what we see about this property is that currently with a 9.3% ROE, it's actually beating all the residential rental yields, because in the residential market in Singapore, we see it as about 2.5 to even 3%, but never will you ever see a rental yield of about 9.3%, okay? And of ROE of 39.8%, if you account for your principal and your positive cash flow, it's an investment product that is sure that you shouldn't miss in this market. Okay, it's a very, very good investment product, and even if you want to find a stock that can give you 39.8% ROE every year, I don't think that it is possible. Maybe if you're lucky you can do it, but if not, I think real estate is currently actually the best product when it comes to investments. Okay, so thank you for watching this video, and I hope you have enjoyed this video. Okay, this video is a little bit more thorough when it comes to analysis. So if you love our video, just give us some reviews, like our videos, leave us some comments, or even tell us some of the properties that you want us to review. Okay, thank you so much for watching this episode of the Millionaire Investor Series.